Good morning and welcome to the early bird. And here we're looking at the Dow Jones, but we're looking at it through the monthly chart. And yeah, so I just thought we'd start on a monthly and have a look at a weekly and so forth. And I think one of the things that I wanted to point out here is that we're coming back up closer to these highs through here, and that obviously would be some sort of resistance there. We know that most of the news from the US reporting season and the European situation is in the market, it's priced in. So now we're facing these old highs here. And I just sort of wanted to draw your attention to this situation here is that, well, first of all, in a bigger picture still, this move down through here, then coming back up through here, it rallied quite high in relationship to this situation here. So we're finding this rally back up here is also rallying quite high as well. So that seems to be the nature of the beast. And if you look at this particular pattern in through here, where it had its little correction rally back in through here in three waves back in here, that's kind of like this little one here, and that will show up more so on the weekly. We'll have a look at that in the moment. So really we're looking at this market coming back up here, running into supply area up here, sellers. So the same as this little sort of rally here, or this one here coming back into this area here. So as this one here rallies back into that little rally back up here, this one here rallied back up into this one here. In fact, sort of quite high into that too, if we look at that through here as well. So that rally came in quite close to the top there. So we should really expect that to come in through here. That current top there is close to 12.3 there. Let's have a look at that on a weekly chart there. So the point of this monthly chart was just to have a look at the market does bounce back up quite high into supply areas, and we're just trying to recognize more detail within those supply areas there. So looking at that on the weekly here, we see that this bar here, this line here is at 12,300 and 12,500. So the 1, 2, 3, 5, the normal sort of scenario there. So we've had a reasonable sort of range in these runs up through here based off the news from well, the reporting season in the US and the European news as well. But now we face this area here of resistance through here. So really, there is risk here. That's what I'm pointing out. So being long into resistance here after would only be chasing the market into a danger zone here. So I think that really needs to be. I know it's hard to control the sort of wild horses of emotion, thinking that we're missing out on something, but you know, we really need to take a good look at what we're facing here. In terms of Elliott, of course, we'll be looking at this in terms of 5 waves down through here as such, and we'll be looking for 3 waves up through here. So that 3 waves up through here, it has gone slightly beyond its 61.8% retracement level there, more into the 76.4 retracement level sort of area, but that's no sort of big deal really. All of that stuff, it can be spot on, it can be sort of way out as well. So I think what we've been looking for here is we're looking at this structure, this October run up through here, and counting that pretty much in 3 waves, and we're looking at the last little 5 waves in there. So we're very close to a top right here, or one more little push up, I would expect so, and that's what we're going to look at there. So I guess what I'm pointing to is that we could be facing a turning point here early in the week, the Monday, Tuesday, Wednesday on the US markets, Tuesday, Wednesday, Thursday for us on our local markets here. So just drilling down into that point there, we're looking at the 5-wave structure moving to the upside. I might just find another chart here, just one more bigger picture out here. Okay, so this one here, a bit, I know it's a bit sort of messy, it's just my workspace really. So we're looking for 5 waves up. So we've got the 1, we've got the 2, we've got the 3, we've got the 4, and we're looking for the 5th wave to move up through here. So it was a little bit dodgy in this little area here of actually calling this up for 1 and back for 2 through here, but I'm going to go with that, and we'll go for the 3, the 4 and the 5 to this point here. So we're looking in at the 12,300. You know that I'd be looking at the 12,272. You know that 72 is important to me, but when we've got 772 or 272, that sort of harmony there, it seems to have a lot more strength in that area there. So once this is completed here, then we'll be looking for a rolling over of that point there. So that's why this is why I'm taking the time to look at the bigger charts there and drill in here, because I know that we're all keen to go long on the local markets, and that's a possibility as well. And the other thing here that's sort of worth noting as well is the 12,300. So the closest largest number is 12,000. So we would be treating as 12.1, 12.2 and 12.3 as group 1. So we would expect a high to be above group 1, and then we would expect an ABC correction. So look, after that ABC correction, if we found support back on 12,300, then that would be the key to be long up to the 12.5 at that stage. Okay, so we need that ABC correction there as evidence, a 3-wave structure, and then support back on it to go long at that point. So that would take care of that degree of structure there if we're going to push higher. But I reckon that we're going to be pushing higher above the 12.3 and then failing and not coming back over it, and would find it as resistance, and we'd be looking to the downside there, and that'd be the end of this whole rally coming right up through here. So it is an important area, and that's what we'll be sort of facing early, mid to early next week. For the very short period term, though, we'd be looking for, like the Monday US session, we'll be looking for a push to the upside there. So that would give us Tuesday, probably give us a Wednesday high midweek there, but we'll see how we go. The profit taking normally comes in on the Tuesday there. So anyway, that's what we're sort of looking at there, and coming back into here once again. Considering this the 4th wave here and the 5th wave to be pushing up above there, so that's okay as long as that, as long as the price stays above this subgroup 2 area here. 65.72 is the most important, and the 80 there, and also the 200 here. So if that stays up there, we'll get our 5th. Otherwise, we'll be looking at 5 waves down to here, as an A wave and a B wave and a C wave back here, and then we'll push up through there. So we'll see how we go with that, but it does appear that we've had some sort of buying climax coming in through here, but that's anyway, we'll just sort of consider that. We'll be looking for one more push higher, and that would be the same in the S&P, well, in the S&P 500, slightly different count actually. This is what we'd be looking for, and I mentioned this in the early bird this morning, so I'm just kind of figuring out here that would be having a 3rd wave here to here, then a 4th, then a 5th up to here. So that does take the Dow much higher as well. So I'm either wrong on the Dow or I'm wrong here. One way or another, I'm wrong in that point there. So let's just see how we go with this. Let's allow this to come up to the 1300 first and see how it treats that level there, and see if it can get back up after that there. But that would be about the extent of it. This here, this is the length of the 3rd wave here taken to this point here. This length here would be 61.8% of the length of the 3rd wave coming into here, and this length here is also the same length as wave 1 as well. So it's just a bit of Fibonacci work there to come in, but I'd be more important to find out if we were going to find support on the subgroup 1 here, 10, 20 and 30, and finding support on that, which I don't think that we will in relation to the wave count that we're tracking at the moment. So it could fail from this point here in line with the Dow Jones, or we can have this other push back up through here. So yeah, so that sort of brings us in to have a look at some of the other markets there. And if I look at excuse me. Okay, the same with the DAX here as well. We're looking at a wave count here of up for 1 here, back for 2 here, up for 3 here, back for 4 here, and then up for 5 to here. And in this wave 5 here will have 5 smaller waves in terms of up for 1, back for 2, up for 3, back for 4 into here, and up for 5 here. Once that's complete there, that's also a medium level there at 6,500, the 65 level, so that should have a strong resistance there as well. So we'll see that play out, the same as we'll see the FTSE play out in its current highs here as well, in terms of a couple of numbers here. The 5,800, the 800 is a profit-taking number, so we expect that to be hit. But also, as mentioned here, as we're coming up through here, the 5,772 there, the little area in here. But all the markets that I see, this would include copper, gold, oil, indices, currencies, that they've all had this little fourth wave pullback through here, and we expect one more push to the upside there, and then to roll over from that side. So that's the concern that that I've been going on about this morning. So anyway, that's the go. We'll look at that on our local market as well. So when we do that, we're looking at the cash or the SPY here, the Australian market, and we're kind of looking for look, as we talked about on Friday, we could be up for wave 1 here and back for wave 2, and having a long, strong sort of move to the upside. That's fine, and we'll get there when we get there. But what I want to do, because of where the Dow Jones is in the world stock market and all those major drivers there, we need to stay in tune with that until proven otherwise. So even that there is possibly a larger bullish picture unfolding to the upside, we just got to get past this particular point in terms of risk. So and that's what I'm going to sort of focus on. So there's plenty of time for the bullish move to the upside if it's going to occur. So in this short-term period here, we're kind of looking for the 1, the 2, the 3, the 4, and the 5 there to finish that structure there as well. So as you know, that the 4,500 would be the next level there. So from the 4,000, the Fibonacci sequence, which we use as a price ratio of expanding and contracting, would be the 1, 2, 3, 5. So that 5 there would certainly come in at the supply level there. So if the 5 became support, then we can look at these highs being taken out through here. So, but we want a robust support there, and also we want a robust support on the 4-3 here as well, because as I mentioned before, the 3 is the top of group 1, and it's just not enough for the price to be above it. It's got to come back and retest it. So in that tune there, looking at this particular structure within here is what we'll do now, and just to sort of narrow that down. And we have been looking at that through here. So we're looking at 5 waves coming up through here. We've got the 1, we've got the 2, then we've got the nice third wave up through there, nice and long and strong, and that would be the 1, the 2, the 3, the 4, and the 5 into here for that. So we've got wave 4 here now, pulling back to 38.2%. I don't know if that's the case, but from that low there to that high back into here. So that should be it there. It does appear that we've got like a 5-wave structure down to this point here, but we'll take that into consideration. We'll consider that while it's above well, this is a trading thing now. So look, on the open, once it stays above the midpoint here, the 43.50, then it's supported. And if not, if the midpoint becomes a resistance, then we've got to look down here for support back down through here, and a retest of the 4.3 here, which is likely while it's under the 72 here. Yeah, if it stays above there, then the bias is the long side. You know that the 72, the 65, 72, and the 80 are the resistance. The 72 is more important. If the 72 became support, then you can trade to the upside there, and we'll be looking for one more high above here. So that could bring us in the Monday, Tuesday sort of area there. But if not, if it slips, then it's back here. We need to deal with the price back here looking for support. But look, we're just looking at the general structure of this moving to the upside, and looking for that wave 5 there. And this pullback occurred within currencies as well. So when we're looking at the euro here, we're looking at this in the bigger picture the other day, and I'm just bringing it back up now too, because this is what the Dow Jones and the US indices are facing as well, and the S&P 500 and the euro will pretty much sort of move hand in hand, while the US dollar is still moving to the downside, and there's still more downside movement there, and we'll have a look at that in a moment. So as it's coming back up here, that'd be the 144 there, the Fibonacci number. That's probably where Gann and Elliott meet, or the Fibonacci sequence numbers and Gann meet. So two great analysts meet at that 144 number there. Still, the Fibonacci sequence of numbers and all of Gann's work are so close anyway, it doesn't really matter in which way that you use them. To me, it just boils down to them being support or resistance, and we're facing supply here, which is resistance, which are sellers, and we need to take that risk. This is risk taken into consideration, because it would only be suckers buying into that situation there. So breaking that down again, you can see that this on the euro is very much like our local market as well on the SPY. So we're looking for wave 4 coming back in here. The 38.2 retracement level would be in around the 441 here. So look for that, and we'll look for a move to the upside. I mean, if you're going to trade long to the upside, well, then you'd be looking at this being support here at this stage here. So well, the 72, you'd want the 72 as support. At the moment, it's been retested as resistance. It's vibrated across here. It's ended up being under it, and it's under it at the moment, isn't it? So it's at resistance here. So, but this is close on a Friday, so everybody's bolting off from that point, so they're not really interested in it. But let's see how it opens and settles. But it can technically come back down to the 38.2 retracement level, and then have the one more push to the upside there. And the upside here would be quite strong here, as I would have naturally pointed out. The 14272 here would be a strong point for that to move further up. There's still further. There seems to be more room in the currencies to the upside, and also, like I mentioned, in the S&P 500 as well, slightly different than the Dow, and the euro would fit the S&P 500 there. So you can look at those two markets together. But being long or short here, one good way of looking at that would be with the US dollar index here, of course, and at 75 here. So looking at this trend still coming down, he would expect to bounce off here, off the 75 as support, but eventually coming back down. We'd probably see more movement coming down here, but we're still looking for another move down here, as we're looking for another move to the upside on the indices, be it the DAX, the FTSE, the US markets, our market. So there's another wave down here and a wave up on the other side there. The Australian dollar here, we've got this strong bullish count here. As we worked out the other day, we had that big ABC structure coming over the other side there. So we're looking for for this to really sort of motor on to the upside. And that possibility exists, and we'll play that as well. But I just want to also bring this in line with the indices, and with the indices, especially the Dow. I want to sort of point out this little structure in here, this 1 here, this 2 here, this 3 here, this 4 here, and looking for 5 waves up through here to make the 5th wave up through here. So the 108 is we can drill down in here in a minute, but basically the 108 is the big number here, and if that became support, I would expect profit taking at the 108. Now, when it hits a level like this, it can fail and not come back to it, or it will just have the normal, it can shoot above it, and the distance it shoots above will be the distance that it comes back below it, and then vibrate into this number here, looking for support there at the end of the day. The other thing is pretty much arriving at the 108 and then being sold off in an ABC correction. So we've got the arrival, the reaction, checking back for support, and then moving further back up. But eventually, in the longer term, finding this as support would be the key for a nice, safe journey to the upside. In terms of playing this out through here, I might even look at the moment we're at the 107 here, and the above and below this level is what you'll be playing out through here. So we've got, this is 107 here, so above that you've got group 1 and below that you've got group 2. So it's very important to use these two groups here while you're working with the main number there. As you can see in here, we've got that odd orange line in here, which is another 72 number, which is the 1072 there, so it should be the 20 there, 720. Look, if support is found on that, then you can go long. You can add on top of the top of group 1 there as support and move up from that point there as well. But it should just vibrate through here. Now the problem is you've got the RBA with their rates on the announcement 2:30 on Tuesday, Melbourne Cup Day. So, you know, God knows what's going to happen there. The general bias is that they'll give a rate cut. So I'll probably go the opposite of that and say that they won't give a rate cut. But I mean, what we're sort of looking for here is we're looking for them to run it up and then to sell it off. Now, if you're going to sell it off, it will come into this number here that will be very important, the 772 there. That would be the area that you'd be sort of looking for. But that's another day off. We've got that whole Monday and US markets and so forth, so it may end up being higher than that. But yeah, so I don't know, buy the rumour, sell the facts sort of thing. Can we now nail that down a little bit here? Okay, it's a bit here on the 4-minute chart here. So we can see that on the Monday sort of opening here, you know, this is a corrective pattern, yeah, across the 107. So you're looking for support, and you know, essentially that you'd be looking for, if you're looking for a trend up, you'd be looking for Dow theory sort of stuff or Elliott stuff. So you'd want to be making a new high, so that's fine. But you'd want this 72 number here as support, and poking its head up there is not enough. You need it to go up and come back and retest it. So that's what you'd be looking for there, and then adding on to this point here with the view of taking that high out through there as well. A softer opening would have this under here, and you wouldn't go, I mean, I wouldn't go short unless I really had the 72 here as the resistance. If I was trading a handful of contracts and I found this is a retested resistance of rolling over, sure, I might look for something in here, and I'd be looking then for an A and a B and a 5-wave structure down for the C wave down through here, and then looking to buy back in long at that point there, in line with the Dow drifting higher and other indices. On the other drivers, such as the copper market here, we're looking for retest of the 400 here, and this is the wave structure that we're looking at through here. So if you can follow this for a moment, you've got wave 2 to here. So we've got that little 5 waves that we're talking about there for wave 1, wave 2, got that nice long third wave in there, and there'll be 5 waves in there as well. You can pull that apart. We're only on the hourly here for the third. We've got the 4th here, so we're looking for the 5th here as well. So we'll be looking for the 5th with the new high above here, and then we'll be looking for a 4th wave and a 5th wave. Now this kind of pattern here would be in line with the S&P 500. If it was in line with the Dow Jones, this would be the high here. So we do need to be careful about this, but what we can do is we can just go, well, okay, let this play out through here. And if the 372 becomes the resistance and then the 65 is a trigger to the downside, then we'll be looking at that as a top being played out there. And that would be the same with oil as well, because we've been looking at oil coming. This 3-wave correction here should give us a new high above here, and that's what we've been looking and considering and so forth. And this is developing quite nicely here now. We can see that we're in minor group 1 here from the 90, the 1, 2, and 3 here, and support on top of the 3 here, on top of group 1 there. This is quite a nice development. It's moved up through here. That's what we do. We'd normally trade it up to the top of group 1, get out, wait for the correction, however it's going to be, and then look for support. So it does appear that we've got a bit of support there now, doesn't it? You know, in this section here, it's starting to you know, it's made it's came back down and it's come back up, and it's making an effort there. So that's the point that you would look further to the upside on that one there. Well, at least getting to the 95 anyway, making a new high above here as it jumps across the river, so to speak, in Wyckoff terms, and looking for that last leg up through here. Gold and silver, Much the same sort of scenario here, where we've been tracking this 5-wave structure up through here. We're looking at the 1800 in the sort of bigger picture here, but we're just looking for, at this stage here, in line with the indices, another high. So we'll come in at the 1772 there as well. Yeah, so look for resistance within that sort of area there, and that would be the same for silver as well. So you can see that silver, you know, we had the up for wave 1 and back for wave 2. We got the 3, got the 4, and we got the 5. So we're looking for one more little push higher here before this sort of rolls over here. But we can look at the trading ranges as they get coming up into these sort of areas up here further. But so we're not interested in going long so much in here. We're looking for the trading ranges to start appearing shorter here, and we're looking for weakness here, and then we'll be looking for the 35 as a retested resistance to look for a short there at that stage there. So that's the general sort of picture. So just sort of going back over things here, we'll be looking for, you know, it would be nice to have a really nice big bullish picture in the Asian markets, and we're considering that. We're looking at that, and we're also considering, well, when can we get into that? And when we can get into that is when the Dow Transports, Dow Jones, S&P 500, and so forth actually get past their 61.8 retracement levels and basically prove to us that they've got support at those highs there. So on the weekly chart, we could look at next week on the Dow Jones. We could have a look at the length of the bars with the Dow Jones going up here. So as an example here, so with the Dow Jones going up on the weekly, if I can just find that, maybe I can find it here. I think it might be sort of too many charts behind the 8 ball there, but yeah, it's gone, so not to worry. But look, we'll look at the coming week's range in the weekly bar, and if it's shorter than the previous week, like this week that's just passed, if this current week has got a shorter trading range on the weekly and on lower volume, then we know we've got a turning point in the market there, and we would take that seriously as a short from that point there. So all righty, well, good morning and good luck. Cheers.